Yeah, let's talk about India. I think it's really interesting. Let me explain something. This is a cool little financial scandal that happened recently, and I want you guys to know about it. It's What's New Delhi. Okay, welcome back to an old classic segment, What's New Delhi, on what's going on in India. I want to introduce you to a little company actually in America first. It's called Jane Street. Some of you might know about it because it was where Sam Bankman-Fried got his start. This is how it's mostly known. Jane Street is a very prestigious Wall Street hedge fund, trading fund that has been blowing up in recent years and is now, I think, like 1 in every 10 stocks bought or sold is done by Jane Street. They become massive. They're up there fighting with Morgan Stanley and Goldman Sachs, the old titans of Wall Street. Jane Street's one of the newer, younger guns that has become like the hottest place to work. Interns at Jane Street usually win 1 million math and science competitions, and they get paid $250,000 a year to intern. An intern at Jane Street, which by the way is like the most prestigious Wall Street thing you can get on your resume. An intern at Jane Street makes more than the chairman of the Federal Reserve. I'm not kidding. I'm not kidding. His salary is $190K. The intern at Jane Street's making more. It's pretty competitive. It's hard to get into. And what they do all day is find creative financial ways to exploit markets and make money. That's their whole business model. They find weird trading patterns and arbitrage opportunities and find ways to make money. So for many years, they were a relatively small player. And then around COVID, they hit it big. Around COVID, they started making billions more, and they became one of the biggest trading firms on Wall Street. And now they're up there punching with the big guns like Morgan Stanley and Goldman Sachs. That's the intro. You actually need to know what Jane Street is and why it's important, okay? Now we take our story to India. Adish, if this is a clip, play some Indian music. Set the stage. And in India, something crazy happened over COVID as well. A new wonder of the world appeared. You may be familiar with the Taj Mahal, but an even bigger wonder of the world appeared, and it was called India's options trading market. Now, I'm gonna explain to you what an option is, but first I need you to understand that India, despite having a much smaller stock market than America, has a bigger options market than the United States and the rest of the world combined. Now, very simply, you can buy and sell stock. Options are like making bets on the direction and the time of a stock movement. It's like bets on whether a stock will go up or down without actually buying or selling the shares. In India, that's extremely popular, and they have over 80% of the worldwide options trades on their stock market for no real reason. Again, India is much, much smaller as a stock market than America. But for some reason, over COVID, this blew up and became massive. So this became a wonder of the world. This is this weird, unique quirk. Excitement and worry as stock options trading booms in India. Now, I'll do a quick explanation. I don't want to get into financial mumbo jumbo here. I want this to be broad. So I'm going to very quickly explain kind of the basics of an option and why it's weird this got so big. So this is the Indian stock market. This is the top 10, it's not 9 companies in India right now. And India, much like America, is very top heavy, okay? Much like our entire market is moved by like 7 companies, theirs is also moved by like the top 6 to 10. And there are all these big Indian banks. Those are the biggest stocks in India. State Bank of India, ICICI Bank, HDFC Bank. Like they have a very top heavy, bank heavy stock market. So to put it simply, a few bank stocks moving a little bit up or a little bit down basically moves their whole market. If there's a bad day for a few bank stocks, it's a bad day for the whole Indian market. It's worth knowing that. So here we go. Let's say you are a trader in India and you have $200 to your name. Okay, this is you. You are a trader, you have $200, and you're gonna make some money in India. So you notice the stock price of HDFC Bank is $200. So you can afford 1 share. How about that? Good for you. So if you buy 1 share, this is you buy 1 share, and then over the next week, that share goes up to $250. How about that, dude? You just made $50 profit. You bought 1 share, the share's worth $250. You can now sell the share, make a $50 profit, you've made some money. This is how regular stock trading works simply. You buy a piece of a company. If the demand for shares of that company goes up, then you can sell it for a profit as the value of the shares go up, okay? That's stock trading. However, there's also something called options trading, which is a little more degenerate. But let's say you're an award-winning genius trader in India, like Squeaks. or maybe you're willing to be a little bit more degenerate. You have $200 and you don't want to go around with this lame ass, low limit, buy a single share, hold and wait type shit. You're trying to get rich now. You're not trying to get rich in 20 years. You're not trying to buy and hold boring ass shit. Sorry, I'm cursing too much. So you buy what's called a call option. This is basically a bet, almost in a casino, that the stock will go up to a certain strike price in a certain period of time. The reason the options are degenerate, with the stock, you have to be right on the direction, but it can happen anytime. As long as you're willing to wait, it can happen anytime. But with the option, you have to be right on the direction and the time and the amount, actually. You have to be right on all three things. Only then do you make money. Now, you can make a lot more money, but you have to be right on three things, which makes it much more risky. So Squeaks here, he knows that HDFC Bank is going to do good this week. So he bets a 1 week short-term call option at 220. This costs, he buys 2 of these. This costs him $200. By the way, this is real, these are real numbers. I plugged them in. This costs you $200. So you lose his 200, he's down to 0. But he's got this call option. So when the bank goes to 250, how much do you think he makes? He spent $200, you spent $200. You made $50 profit, how much does he make? He made $6,000. He made $6,000 off his $200 investment. Now here's the thing, had the stock stayed at 200, stayed flat, he would have lost all his money and done nothing. Had the stock gone to $219, he lost all his money, gets nothing. But because it went to 250, it was in the money, it was profitable. He made the right bet at the right time in the right week. He guessed right and he made a huge profit. That is very simply why someone might do options, because it's more gambly and the payout is way higher on a small entry fee. With stocks, you kind of need a lot of money to start with to buy a lot of shares so it can grow and compound over time. But with options, you can take a little bit money and make a crazy bet, and if it's right, make a lot. That's the idea. Now, options are really designed for hedging. They're designed so that like somebody with a huge position can make these small bets to cover their ass if things go wrong. But they've turned into a casino. And in India, they're a much, much bigger casino than everywhere else in the world. For some reason, almost all the option trading in the world is done in India, mostly by retail regular traders who are trying to gamble. They're just making wild bets that this stock will go up this fast, this stock will go up this fast, just making wild, crazy bets about India. Think of how big Wall Street Bets is in America and multiply that by 4. Really by 10. It's just so much bigger in India, okay? So what's unique quirk about that though, is that the Indian stock market has a huge options trading market, but a relatively small actual stock market. The amount of money, this is like the derivatives to cash trading ratio. The bigger this ratio is, the more money there is in the bet on the stock than the actual stock itself. In India, that number is off the chart. It breaks the chart. In the US, it looks like this. In India, it looks like this. So I think a good metaphor to explain it is, it's like, imagine if everybody at this convention was betting on the price of Black Lotus going up or down, but not actually buying or selling any Black Lotuses. Like nobody owns a Black Lotus. Everybody's just making bets with each other on whether the price will go up or down on Black Lotuses. That's sort of the idea. The Indian stock market, nobody actually owns the card. They're just making these bets. So let's go back to that Jane Street graph I told you about. How did they get so rich in the 2020s? Well, obviously COVID was a part of it, but a big thing that happened there was they opened their India office, and all of a sudden their profits started to explode. They started to consistently make a lot of money out of India, billions of dollars. Why was that? Well, one thing, just generally, hedge funds like this or trading firms, they love options markets like this because retail traders always lose in general. In fact, India's regulator has figured out that about 93%, or they said 9 in 10, but I looked it up, 93% of traders in India lose money, and they lose an average of $1,500 a year. Most people who buy options, they guess wrong. They get the number wrong, they get the date wrong, they get the direction wrong, and they lose money. A few people hit it really big and it becomes awesome, but it's actually a horrendous casino where most people lose. So really think about how unproductive that is. There's this massive, massive options market in India, millions trading options, and almost all of them are losing. That is a gold mine for hedge fund traders. But what they found is even more devious. They found an even more devious plan. What they realized is, since almost nobody is buying the actual stock, you can make the stock price move relatively easy by just owning some of it. Because it's not a very deep or liquid market, you can sort of make it go up or down by buying or selling it. And because there's so much money in the options market, you can actually get underpriced options because of how much supply, how much there is. So realistically, it's like this. It's like, imagine if you owned a huge number of Black Lotuses, okay? And you decide to sell them at a loss. That seems really stupid, right? But what if there is such a big market for betting on Black Lotuses that you placed an absolutely gargantuan bet that Black Lotuses would go down in value? What if you place a $5 billion bet that Black Lotuses will go down in value, and you're able to move the prices of them with just 6 or 7? So you sell these at a loss, the price goes down, and you win your massive bet. This was the arbitrage opportunity that, I mean, very simply, it's more complex, but this is very simply what they did, that Jane Street figured out in India, and they told nobody. So for years during the pandemic, Jane Street started printing money out of India. Basically, they just farmed the weird obsession with options markets in India for billions of dollars a year from regular people in India. And then something happened. Again, people at Jane Street are paid very well, but sometimes they get offers that pay even better. And they don't have non-competes. Millennium Capital Management, another young gun hedge fund, comes along and offers a buyout package for some of the talent at Jane Street. And they poach some of these highly paid interns and employees. Not a big deal, right? Sometimes people get offered better, they go somewhere else. But then Jane Street notices Millennium starts doing the same thing in India that they were doing, which reduces their profit, okay? Because if everybody starts doing it, then suddenly it doesn't work as effectively. So the arbitrage starts closing. So Jane Street gets pissed. They're mad. They want to keep doing this free money glitch forever. So they sue Millennium for stealing their secrets. Now this turns out to possibly be one of the dumbest and most expensive lawsuits ever done. because once it's a lawsuit, it becomes public. During the lawsuit, all this stuff has to come out into the public. They have to explain how they were making this money and how their secret got stolen. And guess who's listening very closely? The Indian government. The Indian government starts, wait, why are we talking about billions of dollars being made off Indian retail traders? And they get very mad. They start noticing these $4.3 billion made just farming over and over. Again, all they were basically doing is buying a bunch of Indian bank stocks and then dumping them on the market to make the price drop for that day, while making a huge bet the price would drop for that day, and then taking in the cash. And they did this over and over again and just farmed average dumb retail traders in India forever. So as of like yesterday, the Indian government went scorched earth and completely banned Jane Street from India. And in fact, has already impounded $550 million of quote illegal gains. Now it's interesting. Again, Jane Street would argue what they were doing was entirely legal, and it might actually be. It's tough to know where the line is on market manipulation because they are allowed to make the bet. They are allowed to sell a stock. Nothing was below board. It was just unseemly. It's just unseemly. It's just a way to consistently exploit retail traders over and over and over again. It's not insider trading. It is odd. Here's the thing. It wouldn't happen in a normal market because the amount of money you would need to make the stock go down would cause you to lose just as much as you would gain from the bet in most markets, in big, deep, liquid markets. But the Indian market was so unique because the betting market was so much bigger than the actual stocks. So you could put a much bigger bet out than you should be able to. So it's interesting. It's interesting is what I'll say. Anyway, it has been now banned. And now the Indian regulator is like just looking for blood on all of the foreign trading firms in India. But that's where we find ourselves today. And obviously every other Wall Street hedge fund is shaking their head and being like, wow, we can't believe Jane Street would do this. This type of behavior is not becoming, but they all basically wanted to do the same thing. They just didn't know the, and in fact are always looking for similar opportunities. But now they have a chance to knock their competitor down a peg, and so they're taking it. And you know, I don't think there's much more to the story than that. I just wanted you guys to catch up on this little bit of financial news that has been sort of taken the financial word bust. It's a very interesting, nerdy piece of news that I've been enjoying reading about that I thought I'd share with you. So there we go.